Assalamualaikum, my name is Muhammad Razin and I will present about the introduction about accounting fraud. Okay, first, what is the tone at the top? Tone at the top refers to the ethical and cultural values that are set by a company's leadership. Okay, next, what is the tone at the top of Tesco? The tone at the top of Tesco is the CEO Philip Clark prioritizes aggressive expansion and immediate financial gains over ethical considerations and responsible business practice. This relentless pursuit of growth allegedly create a culture when manipulating financial figures to meet ambitious targets become tacitly acceptable.
Assalamualaikum. Hi, my name is Nur Shakiri. So today I'm gonna explain to all of you about the Tesco 2014 case on how it was perpetrated in consent. So Tesco is one of the biggest supermarket in UK. It was involved in accounting controversy in 2014 that caused some retail concern. So Tesco exaggerated its profit by $263 million. So how it happened? So in September 2014, the Tesco senior, which is Amit Soni, alerted the legal department to the accounting after becoming suspicious of them. Because of this, it sets off an internal investigation that verified the fraudulent activity. Let me explain to you who was involved in this Tesco 2014 case. So firstly, Amit Soni, the senior accountant at Tesco who raised concern about accounting practice in September 2014 that triggering the internal investigation. So next, on September 2014, 4 executive directors was dismissed because of their involvement in the fraud. There is also Carl Berg, Chris Bosch and John Scottler, which is the Finance Director, Managing Director and Food Commercial Director, that was dismissed in 2019 because of their involvement in the fraudulent activity. So next, which is the Serious Fraud Office, SFO, investigated the fraud and examined a $129 million fine on Tesco. What? So firstly, I'm going to explain to you about the fraudulent activity, which is I tell you on the beginning, Tesco overstated its profit by $263 millions, but they're using a technique called as premature accrual, in which revenue from upcoming sales and discount was recorded early, while related expenses weren't recorded until later. So how could this happen? One of the reasons is because culture of fears. Employees were pressured to meet unrealistic financial targets and discouraged from questioning accounting practice. When this happened? So this happened on September 2014. The internal investigation at Tesco confirmed the fraudulent activity, and on October 2014, Tesco publicly announced a statement of profits. Probably happened at Tesco PLC's headquarters in Welwyn Garden City, UK, because this is where key executives and finance personnel resided and had access to the company's financial center records. Who is the whistleblower? The whistleblower is Amit Soni, the senior accountant at Tesco, who came forward with information in the Tesco fraud case, who bringing this dishonesty in 2014 to public attention. The alerted company's legal team to concerns over the fraudulent activity. Soni was not an external auditor or internal auditor or even an SEC or SC. He is only accounting, financial planning and forecasting. Because of this, it will be more accurate to call him as Finance Department Internal Whistleblower.
My name is Putri Balkis and I'm from SC50. So moving on to pressures, opportunities and rationalization. So we can examine the pressures, opportunities and rationalization that might have led to 2014 Tesco accounting fraud and how they were exploited. So these three elements, which are frequently referred to as fraud triangle, are crucial to comprehending the motivations behind why people might commit fraud. So the first intensive or pressure, which is financial pressure. Tesco's or the party's financial struggle may have been one of the main sources of pressure. So it's possible that there was a lot of pressure to reach financial goals, particularly in a field with fierce competition. So the temptation to falsify financial statements may have originated from the need to demonstrate steady profit growth. Second intensive pressure is market expectation. So Tesco was under intense scrutiny from analysts and investors due to its public listing. So people may have been driven to commit fraud in order to falsely inflate financial performance by pressure to meet market expectations and preserve or increase the company's stock price. And last one is competitive environment. The retail market in which Tesco operated was quite competitive. So individuals may have been motivated to alter financial data in order to provide the impression of superior performance due to pressure to outperform competition. Second one is opportunities. The first opportunities is weak internal controls. Internal controls in a corporation are inadequately implemented or poorly enforced. Fraud opportunities frequently result. In Tesco's situation, it's possible that people were able to alter financial record covertly due to a lack of supervision or inadequate procedures. The second opportunities is complex accounting processes. So in Tesco's operation, both in terms of scale and complexity and the intricacy of its accounting processes may have presented potential avenues for manipulation. Confusion and an increased likelihood of fraudulent operation being undetected at first might result from the intricacy. So the last one is complex supply chain. Accounting fraud may have been made possible by Tesco's operation and supply chain complexity. It might be possible to use the intricacy to conceal financial reporting anomalies. The last one is attitudes or rationalization. The first point is ethical justification. For those who committed the fraud may have been persuaded with themselves that their act themselves were necessary for the company's or its stakeholder overall benefit. So they may have argued that the manipulation was a short-term solution to get out of a difficult position. The second point is fear of job loss. People have been justified engaging in fraudulent activity as a necessary strategy to keep their job or progress their careers because of fear of losing their job or facing unfavorable outcomes for not meeting performance goals. The last point is cultural norms. People may have justified their conduct by arguing that they were in line with accepting norms. If there was a culture inside the company that encouraged aggressive financial reporting, either directly or tacitly. That's all from me. Thank you.
Every action that has been done must have an effect. It is either bad or good. So, of course, in this scandal has the consequences that involving many parties. So one of them is the auditor. The auditor of Tesco at that time is PricewaterhouseCoopers (PwC). The Tesco fraud case significantly tarnished PwC reputation. Due to its inability to spot the fraudulent activity, the firm was criticized and lost the trust of many stakeholders and investors. So this made it difficult for PwC to attract new customers and retain the existing one. PwC is also under scrutiny from regulators and facing legal action. The Financial Reporting Council (FRC), the UK accounting regulator, fined PwC £6.5 million for its failing in the Tesco audit. This was the largest fine ever imposed by the FRC at that time. In several class action lawsuits filed by investors who has lost money as a result of the Tesco scandal, PwC was also listed as a defendant. This lawsuit alleged that PwC had been negligent in its audit and it had failed to meet its professional standards, and PwC settled this lawsuit for a total of £75 million. PwC also lost clients and significant financial losses as a result of this scandal. The Tesco scandal led to a number of clients dropping PwC as their auditor and also reduced revenue due to fewer clients and lower audit fees. For the firm, which depends on audit fees for its revenue, this was a serious financial. Second, the party that affect in this case is the company itself. The company faced significant fines, compensation payments, and legal costs. There is a fine of £129 million, which Tesco has agreed to pay under a deferred prosecution agreement (DPA) with the Serious Fraud Office (SFO). At that time, this was the biggest fine the SFO had ever assessed. Other than that, Tesco also paid compensation payment of £85 million to investors who lost money because of the scandal. This was ordered by the Financial Conduct Authority (FCA). At the same time, Tesco has to pay significant legal fees to defend itself against the scandal related to lawsuit and the investigation. Moreover, this accounting scandal also caused Tesco to suffer serious long-term damage to its reputation. The scandal severely damaged public trust in Tesco, which in turn caused a drop in consumer confidence and brand loyalty. At the same time, media coverage of the Tesco accounting scandal also played an important role in amplifying the negative impact on the company. The media portrayal of the Tesco as a dishonest and unethical company tarnished its public image. This negative view affected not only customer behavior but also employee motivation, relationship with supplier, and investor confidence. The third one is the management. The accounting scandal had a profound impact on Tesco management. The Serious Fraud Office (SFO) has charged three ex-Tesco executives, which is Christopher Bush, former Tesco UK Managing Director, John Scholar, former Food Commercial Director, and former Finance Director, which is Carl Rosberg, with fraud through position abuse and false accounting. Also, the former CEO, Philip Clark, has even been asked to participate in interviews by the SFO. Considering the scandal, he resigned with public criticism and scrutiny, and his career trajectory was undoubtedly tarnished. Even not directly charged, some executives also face personal financial penalty as part of shareholder lawsuit. The next one is the shareholder. Shareholders were also significantly affected by the accounting scandal. Investors who had Tesco shares at the time suffered large financial losses as a result of the scandal, sharp decline in the company's share price. The scandal directly triggered a 12% drop in Tesco share price on the day the news broke, wiping off $2 billion in market capitalization. As Tesco profitability was impacted by the scandal, dividend payments were reduced and suspended for 2 years, further affecting shareholder income. Also, Tesco agreed to compensate shareholders who purchased shares or bonds between August and September 2014 when the company artificially inflated profits. This compensation amounted to approximately £85 million. However, the compensation scheme only covered a portion of the losses incurred by many shareholders and also excluded many long-term shareholders. The last one is any relevant parties. The party that effect in the scandal is the supplier. Tesco financial difficulties during the scandal led to widespread payment delays for suppliers. Many suppliers, especially small business, experienced disruption and cash flow concern as a result of this scandal. Due to payment delays and order cancellation, Tesco and its suppliers suffered disruption to their usual logistic and delivery timetables. At the same time, the scandal also tarnished trust and communication between Tesco and some of its suppliers. This is made it more difficult to negotiate favorable terms and maintain strong partnership between Tesco and its supplier. In conclusion, what we can learn that Tesco of accounting scandal and fraud have become one of the most cases in history, and they have taught other businesses a valuable lesson, which is fraud is one of the things that can destroy a business or a company. This case shows how ethics are extremely valuable yet challenging to find, since they require courage and integrity in everything that happens. And investors and shareholders now understand and that a successful business is one that maintains ethical standards. In our opinion, every financial fraud begins small and then grows bigger until it causes a serious impact to investors and other stakeholders. If there are control checks and procedures in place that detect and prevent financial fraud, it can be minimized and its consequences can be avoided. Last but not least, the case may not be permanently closed, but Tesco has undoubtedly reached a turning point where its future success will depend on its ability to learn from the past, rebuild trust, and demonstrate a commitment to ethical and responsible business practices.
Okay, next I will present about the reflection that we get from doing this assignment. Beyond the specific lessons, the Tesco scandal whispers a universal truth. Ethical leadership is not just a moral imperative, but a strategic necessity. Leaders who prioritize short-term gains at the expense of ethical conduct will ultimately erode trust, damage reputation, and jeopardize long-term success. The wisdom lies in recognizing that true leadership lies in balancing ambition with integrity, prioritizing long-term value creation over fleeting profit, and fostering a culture of transparency and accountability. That's all from us. Thank you.